What's going on, guys? Another awesome time for recap today. So we had another stellar day here on the short call. So this morning we're looking for that continuation on our VIX call, right? So if you look at my Twitter here, we posted up on Twitter for everybody. Another free trade for everybody here, but watching volume area zone. So the yellow arrows I posted up, I don't know, sometime in the morning here. Eat 41, just at about market open, looking for that rollover. So got my draw tool, just in case you can't see it, but we got volume profile resistances here. Huge POC volume resistance here. Obviously the zone, we lower hide into these zones on Qs and SPY, and it worked out rather well, I'd say. So the VIX has been panning up, and we've been covering this a little bit day by day, especially in the main chat. Get this out of here. So on TOS, let's go to SPY real quick so we can see these cool volume profiles and everything play out. I was looking for a couple different things here on data. We just hit my final short target, which is volume area from back here. So again, we're using prior day, multiple days back, all the way back here. What day is this here? We got 1215. So we have a 1215 volume area profile that I've been using for a target short. So something that obviously slammed down yesterday. I made a call this morning for my team when futures are only up about 40, 50 points. Said I was going to run about 60%, if not more, retrace all the way back before it dumps again. So we waited for that long, waited for data. Data came back soft again. Unemployment lower, not good. And so on and so forth. PCE tomorrow has an opportunity to kind of continue this drain out for a decent red for once on a Friday. But does sentiment actually allow that to happen? Well, I don't know, because seasonality to get a Grinch instead of a Santa rally coming into Christmas is rare. Not impossible, just not probable, right? So where did we get this short to come from? Well, we had a couple different pops here, and these are our data candles here from jobs and GDP. We had some big wicks and some big longs. So again, the bodies of what these algos and wicks do, especially on the TOS data, is what you want to pay attention to, which we always say. So after hours here, we had an algo, big one, 468 body, ranged all the way up to right here where this white level is, 472.5. Well, look at the high day. 472.5. These algorithms give you the free plays every single time, man. These order fills and algos, it's just that beautiful ghost wick. And of course, nothing works out 100% perfectly all the time because there's some time in between these, but this one worked out same day. So after hours here, push right up to our algo level. I was looking for a rejection of maybe a 15-minute 200 SMA or a 66 5-minute. We shied both of those. Right here for the fail, and that's fine because we have been shying moving averages on select tags for a very long time. So if I go to the 15-minute here and look at the 200 SMA, which is the salmon colored peach here, we see that on live trading hours, not pre-market, we have shied this and ignored it for quite some time. So we shied it here. This is in pre-market, shied it here on the live, didn't actually get to it. And if we go, throughout the day, zoom in each and every one, we shied it here. Again, pre-market hit, no live, not even close. And finally a wash. So this is its first tag right here in over a week of the 15-minute 200. Now, for algo's sake, we need to backtrack, right? Which is confirmation. Once you snap a level, you need to retrace back to hit it to go down, right? And we know for 1, 2, 3, 4, 5, maybe even 6 days or so, the 15-minute 200 SMA was ignored by price action live tag. So during live trading hours, we didn't get that. So what is our sentiment coming in? Well, a push towards the 15-minute 200, get short inside, right? Not for an actual tag, start shorting at that pop. That's the sentiment, and start bouncing these resistances off if we can get there. But we shied it 6, 7 times. So what's the natural course of action? Well, we could probably shy it again for 1, 2, 3, 4 days, whatever it wants to go back down. So our short bias was anything under the 200 SMA 15 pops, short it down and walk down. Target number 1, volume profile here. We have a kind of a target here, and ultimately the 10 SMA on the daily backtest is what we're really looking for. Now, if you missed that initial early short, or that data run up short, have no fear. We still have opportunities here on the longer standing time frame. So let's dive in here to the 5-minute real quick. So I want to show you what the max looked like versus the VIX. Now, one of the biggest things we've been talking about here in my channel and everybody else in the private chat is the VIX. For the last few days, we talked about the standard deviation getting swapped to the upside 3, 4 days ago. and looking for that big push up. Now, this little blue level right here was looking for support. Yesterday, we came 1 penny away from that tick fill on the intraday gap that I wanted to see fill up, but no big deal. We did the rip raw. We were already ready for it days in advance because of the standard deviation swap. So you got to wait for it to happen. And then some really big levels were hit on our markets. So NQ 17,000, 4,800 on futures. So if we go to the futures here, when we lost that big wash yesterday, the big continuation high volume washes happened at those big psychological levels, right? Just plowed right through there. And again, you're looking for a back test of that 6665 minute on these time frames. Same with NQ then. NQ lost that 17K, just panicked out. Huge psychological level. Well, what happens after that? We got to retrace all the way back up, slowly come back down and wait for data. Data was bad, popped it up, slammed it down. We're still in downtrend. Lower highs, lower lows, and the VIX is still pressing. Now, one thing between the VIX that was a little hardship today was the amount that we hit highs. We would hit higher lows and higher highs in the VIX, pressing up, up, and up. But the market was showing you heavy consolidation again. And that was a recipe for a scam where we just did the $24,000 win video. I'll take that in the description if you missed the last video for 24K winner. This is what it was doing. The divergence between price action on our indices and VIX was very apparent. So we were not getting fresh lower high, lower lows the entire time, right? The price action was not draining on these futures contracts, but volatility index and VIX was hitting higher highs and higher lows consistently, right? So why wasn't that? That's divergence. That's accumulation. So that accumulation can happen over a course of time and then lag and finally get to cooking, right? So we pay attention a lot to the MACD on the 5 minute to take these trades. And again, I look at the Qs and the SPY to take these trades. I don't really look at the futures too much. If there's some certain algo, certain volume there from after hours trading, from that 5 p.m. Central on to market open, I may look at some of the volume profile levels of the futures, but if I can't find anything in the SPY. But once that 3 a.m. Central hits, all the stocks are open. Watch the Qs, watch the SPY. So once we lost volume profile here on Qs and headed back down, that MAC was showing us that we had some good downside, but it's a lagging indicator, right? So this whole short is the one we caught early on, the pop to short out of the gate. So you're looking for that resistance, and look at the MAC. The MAC gave you that beautiful cross about 15, 20 minutes before open, gave you a crazy algo wick, and we went over the ones on the SPYs. We're on the Q now. So if we go to the Q's algo, we have this beautiful body right here and a long wick. And what do we look for? Just same as happened on SPY's upside. When something is inside the body and wick range, so here's your body, and it pushes down, rejection, right at the body, pushes down, lower high, right near the body, and we're getting lower lows now. We could cumulatively come all the way back down to yesterday's close and lows on the trend on the day, because that's where our algo wick is. Now, we do have a couple different areas that are magnets that are going to be our short targets beyond that, and that's going to have to do with our volume profiles here. So if we pick up our little trading view here and we go to our Qs and so on and so forth. Let's check there. Go to the big chart. So the volume profiles that we're leading here on Qs, the 15 minute, and you'll see from the dump, and then got to get to some of the priors. Remember, we had all these zones. We posted a lot of these zones on Twitter. A lot of these are going to be, or X rather, a lot of these are going to be what those targets are. So like that big wash bounce that we had seen yesterday, that was a double POC bounce. So if I look back here, we have our typical, this is the whole range, right? POC. And then we had 1 day right there overlapped it. So we had a double POC right here at 404.8. So we knew anything above that was going to squeeze up for that 60%. Again, using POCs in prior volume areas of interest where those limit orders were stacked up and utilized. That's where those tall waves are. So as you're walking this thing down on the Qs on the 15, we got some very reputable high waves here where we're looking for on the dump, right? So if we give it this much data right here, and I'm trying to just put as many candles on the screen as I need to have this calculate the SVP of calculator. There we go. So now we have here, so 404.20s. Now that'll fill that gap up here as well. So I think from the Powell Anchor View apps, you see all these hard lines right here. We were talking about coming down from here, the +2 in our last videos, then +1, and coming down to the center. That wash happened yesterday, popped back up to the +1, down to the center, and now you need confirmation under the center, which is just an Anchor View app from the Powell push back here. And we need that to confirm weakness under the zero line here, the center MAC, and under this massive POC at 404. And again, that's a double POC. Look to your left, boom, double POC. So that trade day right here doubles up on the exact same highest volume, because it's talking about from the whole, all the days traded, this day is the most important and is still this day dominant. So we call that just a double overlay. You can see exactly where the highest point is. using both the SVP and VRVP indicators, because the one that you want from the high low right here matches up with one that's already been closed out. We know that 404 and 8 cents is a massive amount of support resistance. That's what squeezed, that's what held. So if we do start the trend under that, that's where we're going to get our bigger pullback. And you can see right there, I got to back up one more time, where that high volume is. You'll see that profile squeeze right back out to here again. Boom. Let's do one more time right here. I think we had a bigger one that came out. There we go. See that volume area low. So when that dark purple starts, that's that volume area low. So we shied it a little bit. So this next pop should also be shorted on the market down via our Twitter call from here. That's a giant color via our Twitter resistance here, coming back down to this gap fill. And if you look to our right here, volume area low, and our next super big volume area of interest. So we're going to cut that drawing off quick. We draw a box right here, and we'll say our short activated trade that we had already put on the board here, I already got highlighted, okay, is going to come back down to around here, the next zone, and that is that super high profile traded zone. Now, of course, we have 404 and change there on POC way back here, obviously. So that whole range is going to be where that next leg down short is going to end up. And where's those entries? Well, if you missed the big wash day, you're looking at our volume, right, from the wash day. Look to your right, start seeing entries for the volume profile and how to use them. So right here, look at how high this volume was. That is a very big zone, okay? Once that was cracked and used as resistance confirmation, let's look at this zone right here. Cracked, used as confirmation resistance. Now we have a couple different ones coming down here. In between here is a little bit markety, so we're not too worried about it. We already had the pop back here to almost this zone, so we're probably still going to keep washing here with that pop, and it's going to continue that roll back down. I could even just,
order filled,
even get some jam right here and start into another position. Sizing for that downside. So that's going to be a beautiful little pop, rejection, and even it climbs for a little bit here, it goes all the way back down. We're going to get that leg into that 404 and some pennies, and that's how I walk them down with volume profile, right? So pay attention to those POCs. Go gap this here, and pay attention to that MAC. That MAC is just separating here again in that 15 minute. We're getting through that zero line very clean. So we're getting macro, larger time frames here telling us that we're going to walk ourselves down. So we need to first press through this little area. So obviously our last area of support is here, is where we're sitting. You can see those volume profiles right there. We won't cover the price action, but right there, those last tall. This is the last bounce point. So I would start a short here. I would slowly get into that short. I would start and I would add and I would add and I would add and I would add until it gets out to a resistance zone, maybe the bottom here, which we had just back tested as resistance, which is the data candle for the jobs and the GDP this morning. That would be a good roll confirmation indicator, right? So once we trend under here again for a brand new trend setup, that's when you're going to get that 404.8 roll and that continuation down. So tune in for the next and have a great day trading.